Good morning and welcome to the Breakfast Club. My name is Darren Hancock and I am working on being a ThetaWave trader. That's right, ThetaWave trader. It's all about the mindset, my friends. It's all about developing the mindset of a ThetaWave trader, getting in that perfect groove where the markets don't bother you, where you find the perfect entry, you feel stress-free, you're confident about your setups, and you live in a place of harmony and balance. Wouldn't that be awesome? Yeah, that theta wave state, peak performance. That's what we're after. That's what this whole thing's about. That's what we're trying to build, a community of people that are out to develop a trading habits that give them some longevity in life. Have a great day, love. That's my lovely wife heading off to work. All right, let me just double check, make sure we're all live here. You hear me smooching my girl before she's off to work? Have you smooched your girl or your man before they go off to work? Told them you love them? Holy doodle, look at that. I had 460 people. We went up like 10 people yesterday. Holy smokes. Wow, that's awesome. Welcome all you new folks. Welcome, welcome. And look at you, Christian, first through the door this morning. Welcome, Christian. Follow the rules, be patient. Good morning. And Rafiq, good morning, my friends. How are you? Did you guys have a good night? I was up early this morning. I was up like 4 o'clock in the morning. I woke up, I was like, I'm ready to go. It must be like 6 o'clock. And then I thought, ooh, I can get in on the London charts. So I managed to boost, I think I did this morning. So got a couple of forward trades in this morning. Moved the account another 4%. And then the Bitcoin, since yesterday, it's already gone up like $7,000. So we're catching some really good turns. I'm loving this. Some of these setups are just gorgeous. I caught this one this morning and I tried to get out here during the news release, but it would not. Michael was right. It does not let you out. It literally just goes blank. It won't let you close out anything. It went ripping all the way down here. I was like, ooh, I'll close that out. Nope. And it came all the way back up. And you'll see that the entry was literally almost on top of itself. Look right here. It got me out right there. I got in way up here, right off this inversion. I was chatting with the guys this morning on Telegram, and there was this, you see this setup happening where you have this consolidation with the manipulation above the market, and you're looking for a drop down below, and then run back into Cam 1, Cam 2, Cam 3, which is also the reversal model. Came back, right back in there, had my stop loss sitting right above here, gave me a real good squeeze, and then booked it, just hammered it down. And I thought, as soon as it takes that low, I'll get out. And literally, liquidity dried up during the news event. It wasn't giving me anything. And then when I kept clicking, okay, let me out, and it finally let me out somewhere in here. But good point Michael makes about don't think you're going to be able to trade CPI or the actual news event itself when the rush is on, because liquidity dries up and they wait. Brokers just won't let you get in or get out. So I got in the minute beforehand, and then all of a sudden they were giving you nothing in here until later on. So yeah, interesting little experiment. But the swing patterns are working awesome. There were some great little trades here this morning off of this inversion right here. Got in off that inversion right there. Went for a long, just above this high. Get out. Pay yourself at the rejection block or the high, whatever you prefer. I think this was another inversion here. Yes, I was looking for this one. Now, it already took out the high. If it takes out the high, you shouldn't really take it. So as soon as it got back up into the premium array, I got out there of that small little range. Same kind of setup here. It went, there's a little break above. We have a little swing point. So broke down below, came back inside it, took it there, it ran for the exit down below. And yeah, so these inversions, these little swing points, gold. Gold, gold, gold. So anyway, that one's up some coinage, and the Leap one is up 7%, I guess, since yesterday. So we're up to 57,000 on that one. Let's get back in here. I want to do this quick run through as I normally do in the mornings. Dark Soul, watching live from India. Dark Soul, welcome, welcome from India. I hope you enjoy the show today. Hopefully we can give you some good setup, some good ideal places to look for entries that are consistent. And I'll show you minute by minute charts, and we'll show you how to read these ranges on a minute by minute based on higher time frame biases. So I do like these lows. Still running for these lows down here and these deeper lows on the hourly, daily. They're all looking really good. Swing point. We have a little swing point right here. Above us, a high inversion. Now, before it takes out the low, ideally you want to see it come back into this before it takes the low out, because those are your first beginning of your scale outs. Then you look for the reversal back the other way. So when you get into these consolidations, these can be a bit rough. Anyway, we'll get to that stuff in a minute. I want to kind of blow through the rest of these. E-mini S&P, there's a lot of speculation that this is going to 5,400 this year, 5,600 next year. That does not surprise me at all. We are looking for a run back down into this fair value gap here. I think just to capture this order block. If we leave this open and run higher above the high, then again continue to look for higher prices. We're still bullish. We're still finding support off of order blocks. So the next support off of this, if this is it here, we're leaving this open, we're looking for clearly more upside here. We're in a consolidation. We have a manipulation to the upside. If we run down through the midpoint of this, look for a further run down into this fair value gap down below us here. And this will be the, well, it is the reversal. Same kind of setup I just showed you earlier on the NASDAQ. We have this consolidation with a manipulation, with a reversal pattern, drop down below it, pop back into it. Your short is right there, right off that low. The mean threshold and the high. Stop loss goes above. You're aiming for first objective, second objective, and then obviously further down to get back into here. Swing point, inversion, body breaks below it right here, come back, trade back into it, you get short, aiming for your first objective, second objective. I tell you, these swing points are killer. You start watching for these, I tell you, they happen so many freaking times. It's unbelievable. This swing pattern right here to take out this high. Here's the swing. Your body breaks above it, trade back into it, go long, aiming for that high. And sometimes you don't get them. Swing point, fair value gap. Body hasn't broken it yet. Finally breaks down here. You don't get back to it before it finally runs down below the lows. So it's not 100%, but it certainly does. It is very frequent. It happened, I think, 7 times yesterday in a course of 2.5 hours. Anyway, let's get over to, so yeah, I'm looking for, you're in the rejection block right now. We've had a 1 minute pullback. We're in a reversal, so look for a run below the low, and I look for a deeper run back into this, the breaker. We're in the breaker here right now. We've run above it. come back into that breaker. So kind of watch that one right now. So block out this breaker straight out in time. So look for 396, look for a run just below here at 39600, and see if you get a reaction off of that and another further run back. Look for a reversal pattern to run back up above these highs and run into a higher PD array. Daily, we're still looking for this run up into here. We may yet still get that run up to that high. Before running down deeper. So look for this imbalance. I still like that one up top. Dollar index, we have this consolidation, a run below the consolidation, run above and below, cleared out both sides of it. We have a reversal pattern, body trades above. You don't get an opportunity to get back in on it there, and you're off to the races. So look for more upside on that for now, until we see a reversal pattern coming back the other way on the 1 minute. That's still bullish for me. So these would be bearish. Look for 50% of this wick. You don't want to lose more than 50% of that wick, or at least the bottom of that fair value gap one more time. You don't want to see that break any lower than that before heading back up again. So if we do get more downside, we're pretty much inside this fair value gap BISI here on the daily. You want to see a breakout of that. So wait, if you see a break above this candle's high and come back to it, ideally I'd like to see it break above these highs, come back inside it to this, and then continue up higher for a higher PD rate in the 1 minute. You've had a quick stab down on liquidity below the market. So if we do get one more run down, it'll all because this will be the linchpin right here. We need to be at a hold price above it to continue to the upside. If we don't, we just come back, find some support off of it here, and continue further down. It is a breaker below that low and this low. So if we just come back to that breaker and react off of it and come down, look for a swing and a return back into this consolidation for further downside prices. Now we're back into this fair value gap. So initially we were bullish on euro, so we may go bearish now while the American dollar continues to rally up. Look for that return to this fair value gap here. There's a small little guy right here, so look for it to return to here, find some support off of that, and then start to break back up to the upside. It can hit the top or the bottom of that. Also 50% of that wick, you don't want to see it break or close below 50% of this wick here, or we may get a deeper dive down into your fair value gap. Otherwise, just kind of look for, I feel like I'm a weatherman the way I'm talking here. Otherwise, look for sunny skies and yeah, so we're definitely bouncing off of this area right here. You see that? Split this thing up into quarters. You'll probably find that's the top 75% that you're sitting in here for this. Well, let's just do that. Why don't we just do that real quick here? Quarters, 25% right there. See the top 25% of that range being worked. We've already hit down to the mean threshold or the consequent encroachment of that SIBI. There's a little tiny fair value gap there. Kind of mark that out inside your charts and look to see if you can find some support off of that back into that order block. Then once you get down into here, that validates this is an order block, so you want to see the mean threshold of that giveaway in order for you to continue to the upside. If it does find support here and we start to work through 50% of this, look for the run below here, and then a further run down into these equal lows down here. CAD. Not much faith in CAD. We're still sitting in that consolidation. See how we just run around inside it, pop out, run back to it, pop out of it, run back into it. I have no joy for CAD, sorry. If we did get more pressure upside for the American dollar, that'll push this down once again into this fair value gap. We may linger around in here, or we may push down into a deeper array. If we do end up running back down into a discount array, here's your fair value gap premium and discount. So if this bullish bear flag for the retail people starts to give way, obviously look for a return back to consolidation to consolidation. If you're trading a CAM model, from consolidation to consolidation, trade the space in between the consolidations. So as soon as you come back to it, trade to that high and just collect your winnings and wait. That's how you trade CAM to CAM models. Same kind of setup in here. But you see how this one's providing a little more support on top of that fair value gap. You want that to hold while you continue to push higher. So if the American dollar continues to put pressure on these to go down, look for a return back into the mean threshold. The midpoint of this candle here is also the mean threshold of that daily fair value gap. So again, if you lose that, look for further downside fill of that fair value gap below you. Still got a little piece left, and if you start breaking below that, come back into it, look for a deeper discount into the next array below you. We also have this breaker right here. We have a swing point, so that run down, look for this candle here to provide a level of support, which is obviously the bottom of the fair value gap. So that'll be your first level of support, second level of support, and then the top of the fair value gap below you here. Pull your fib tool, look where your 50% is, and say, if I was going to run down into a discount really quickly, what array sits here that would support the 50%? The US dollar. All right, so we're looking for this next projection, next price leg down. So far, whatever we called for here the other day, we're getting a run back up into that daily fair value gap. If we find some support off of this, so if we get more upward pressure on the American dollar, that'll give us a full lift up into the fair value gap. Now, where this bottom ends up will be relative to where we get the turn. So in order to get the turn validated, we need to get below this low here. Because right now we've just traded into a long situation right here. This is a reversal pattern where you've traded up into it long, or right there, here, and here. We need to blow through that, come back into it, find some support, and then go long or short here. So we'll watch where we're seeing, look for 50%, a potential 50%. If we go through the bottom of this, we start digging into this array, look for running to the midpoint and then the high. There's 3 specific arrays to look for inside that daily inversion. Oil finally getting a little lift out of here. Nice. So we're getting a lift. This is 1 minute. There's nothing in here that really gives us a nice this looks short to me, back into this range. Stop loss would go here if we get a small retracement back in here. If this closes on this 1 minute above this line right here, close it out and move the stop loss, or just close out your trade, because we're continuing to the upside. Right there, see? We closed above it. So you close it out before it hits your stop loss. Our Telegram account's going off like crazy here. I'm going to turn that down so you don't have all the sounds dinging like crazy. Yeah, look for this back in here. I do like this discount array here, that they're not going to leave that untouched. We have a really good, it comes back and really eats up all the imbalances. So keep that as a discount array in your arsenal when you're starting to run up here. If we take out that high, look for a reversal pattern to get back down below these lows and into this fair value gap here. Gold. Where are we doing with gold? So season open, we're back to here, consolidation, cam 1 model, run back up. There's another cam model. That's what we're talking about, 1-to-1. Trade the distance in between the cam models. So here's your cam 1 model entry here. They're really quick. Back to the cam model entry right here, right off the body. So that one candle, tap in here, we'll get your cam 1, you'd enter in and you'd be out with inside this one hour candle. Now for you, that's for a perfect, it would be just short of a perfect entry there. 21.66 all the way up to 21.71, so $5. I don't know what that equates to you in terms of money and gold, but that's a perfect entry from PD array. So you've got your consolidation cam model to a consolidation cam model here, and look at that, looky, we finally hit the carrot. That's been how many days now? We're calling for this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days, 18 days. So we're just over 2.5 weeks of trading. We called it all the way into here, and then we called it all the way up to here. So you had some perfect, awesome entry here, awesome exit there. You had to wait 18 days to get it. It was a nice long swing trade. We are trading on the daily, by the way, so you're not going to do the minute by minute candle. Obviously, if that's the time frame we're trading on, we'll treat it like this was a 1 minute chart, and you still get the benefit of a 20, or what was that, a $2, almost $2.50 run on your money. $2.50 in here, that's a 10% return. That's not bad. And this one completely, so out of all of the 4 of them, this is the one we totally screwed. We put this line up here yesterday, so it's hit that line. It's taking out those old highs. I'm looking for a reversal pattern to happen here now. At any point above these highs, you look for a reversal and then look for a run down into this level. I'm still holding this here because I do believe this is an area of liquidity they're going to come for. Banks, you guys don't care about Canadian banks. You don't care about Canadian ETFs. And what's this one? Oh, that's just a energy company I was looking at. Bitcoin. And all of the wheat. We have a return to order block, fill of the fair value gap. Look for that to fill down here for wheat. Corn, back up into the mean threshold, run down below the lows, look for equal lows, run down into the a run on this liquidity below the market. Well, it's just ran it now. Look for a run, a pop back up into here, and then a further run down into more liquidity on the downside for corn. Coffee, consolidated, wait for a breakout and a consolidation. Look for a cam model entry on your consolidation from cam 1 over to this. So you got consolidation to consolidation, so this distance in between here is what you want to really trade. It's going to be really short. Well, it's almost touching, so forget it. Those cam models are almost touching one another. So you want to see a nice displacement come back into here, get through 50% of this, and then start running for a higher breaker way up top here. For coffee, Monsieur Coton has now run the lows. Consolidation, run up, come back for CAM 1 model, and then push for higher prices. Coca is, that's 1 hour. Let me go to a daily here. Consolidation, break above, look at that body breaks above, CAM 1 entry, perfect. Perfect CAM 1 entry. For 3 days you're on a straight run up with 0 drawdown for CAM 1 entry. Beautiful. Alright, let's get back over here. Right before the market's about to open up. Who have we got in the house today? We got Thomas, Dark Soul, Rafiq. Trading while fasting is on another level. Oh, I bet. Rafiq, man. I admire your dedication and your commitment to your beliefs, my friend. That's awesome. Watching live from India and love your approach to trading. Very pleasant and effective at the same time. Oh, thank you very much, Dark Soul. All my love goes out to India and all the people there. Wish you guys all the best. Sending you all love from Canada, the cold Canada. Young, good morning. Anas, good morning. Tristan, hello. Lebo Dakash. Lebo Dakash. Lobo Dakash. Lobo Del Cash. Sup, hombre? Homie? Lobo Del Cash. I like that one. Lobo Del Cash. Keep your eyes right here. This range. Watch for a reaction off of this now. Right here. I want to see that take off from here now. There's a little imbalance down here. Stop loss would go here. Not that you actually have to put anything on here, because we've got the new open is just coming now. But this is considered an inversion. So I want to see this leave from me. Actually, I'm going to put something on here just because I do like the idea. And if I'm wrong, I don't mind taking a little hit right here. Oh, it's right at the news release too. Not news release, it's right at the open. We'll see where that closes. Fail safe is, it's going to take me. I was going to say the fail safe would have been the change below this low here. Bit of lows. I was just playing with something. You're gonna see me take losses. That's why you don't follow me. So it's gonna run the low. If it shoots up from here, that's like a sneaky little run. Now I'm gonna wait for a different type of setup. Now that we've run this low, I'm looking for this. If this turns into a big wick now, I'm looking for this to trade back through into it, start running for higher prices here. If not, we do have an inversion sitting right here. We've run above these highs. We've got a fair value gap here. Look for a return into this to go lower. So you've got one for one direction, one for the other. Overall bias is definitely lower. mean threshold. If this holds right now on the hourly, then again we have the run back up into a higher price here for short term, and we could continue further down. Right now I'm bearish. What's up, homie? I tried trading on March contract and it wouldn't let me. I switched to June. I was able to make a trade with Apex. Edka. Are we over on June contracts? What does the open interest say? I haven't looked at open interest this morning. Is anybody in open interest? Can you tell me where the open interest is highest in March or June contracts now? What about scalping gold? Good morning, Dave. Rafik. I'm trying to fast without being furious. I love it. Nice play on words. I would imagine your sugar levels drop quite significantly. You burn fat like crazy. Your metabolism, you have to drink a lot of water, man. That's like being on the ultimate keto diet. You're burning off tons of fat. You're making a ton of ketones, so it's really hard for your kidneys. So you got to make sure you drink plenty of water. Good morning, Tristan. Open interest and volume yesterday exceeded March. I switched over yesterday. All right, well, let's do that. Let's move over. So there's the break above. Look for that. Where's the November? June contracts. Do we have June? That's June. June. And June. Let's get rid of March. Alrighty, we have some displacement. So this is what I was looking for earlier. It obviously took me out. We're looking for that run up here. It didn't bite it. Took me out one more time. Now we have a displacement up here. I want a nice little discount run here. That's all you need though. 1, 2, 3. I want a nice discount array. Stop loss will go down here. What comes down to me, then I'll close the trade, because that's what I'm aiming for ideally. And you don't want your objectives taken before you can get a chance to get in, and then you come back to them, because that could swing above that and create the next swing pattern back down, and you're already too late. You want to try and get in on a long that's not there yet. Applause usually goes down here. Now you've got a swing point. That'll be your first swing, second swing. Don't forget your rejection blocks. Bitcoin's on a little tear down. Couldn't have got on that anyway. E-mini NASDAQ open interest March 97, March 9786, June 22. Oh yeah, okay. Thanks, Christian. Appreciate it. Now if it takes out that high, that's where you'd scale out, boop, your first point. So there was your first entry, second entry. I wanted my real discount, so if I don't get it, I don't care. But if you're looking for 50% of that range, watch the 50% of the range here. I go from here to here, 50% of the range is right on my money. So I want it to come back to me, get the 50% to go up. I wasn't prepared to let it sit up in a premium. I didn't want to pay a premium price for a premium run. Small little run. You know, it can start running all the way back up into here. But that was the reversal we're looking for to get back up into that range, which is what is manifesting itself now, my friends. There you go. So that was one of the first reversals. Now I'll close this out because I didn't get what I wanted. Damn it. I didn't get what I wanted. Pout, pout. Here you go. Consolidation. Watch that reaction off of there. Another place to unload a position. Run back into a CAM model entry. And if you lose 50% of this, because it's a CAM 1 and a CAM 2, if you lose 50% of that, which would be this order block breaker right here, if you lose 50% of that, get out before you get your stop taken. Love me like... Oh, here you go. It's already hit it already. Sorry. I was thinking when it comes to it, it has hit it right there. See the reaction off of it? You come back into another consolidation. You're trading the distance in between, and you'd be out, like, or scale off a portion or slam that right up to break even in case it turns against you right now. These are like super quick snipes, by the way. Like, you got to be really agile to see what you're aiming for. There's a small little range in here that you're trying to get. You're quick in and out, nibble your money, move to the sidelines. It may not be your style. It is not something that Michael teaches, to quickly snipe in and snipe out like that. But if you know what you're looking for in terms of your CAM models, then you just collected yourself some quick snap. In 1 minute, you just collected 97 to, yeah, there's 12 handles right there in 1 minute. And you caught it off of a CAM 1 model. Hot diggity dang, hey? 2 directions right off the bat. We're firing up this morning, folks. We're firing up this morning. I got my coffee in me. We're back into breaker. Last up close candle. Actually, it's just inside this one. So look for a full rundown into here. Back to the order block. It can come all the way into here. And then further upside. So you're between this guy and that guy. What about scalping gold? Rafiq, do you get, and I don't mean this to offend in any way, shape, or form, do you get any bad nightmares? I'm just wondering, because I was on a keto diet once and I was really, really religious with it, and I ended up having some horrific nightmares. Like, I thought there was somebody in the room and they were there to get me. I was like, wow. And I don't get it. Nightmare so real. And it was, I swear, because I was not flushing with a lot of water. I'm just wondering if you get nightmares when you fast like that. E-mini Nasdaq open interest. La Morita. Good morning, everyone, from La Morita. Back into the order block. Now reaction off. Now look for another drive up into here. Fill this fair value gap. Fill now. If not, if we lose this order block, look for a deeper dive down into here. And that would be my... yeah, you do. You have a reversal right here. So look for a body to trade below this. Now come back up inside this. Watch here. Watch. I always get these screwed up here. There we go. Watch right here. Support. Boop. Pop down. Like array to like array. Premium to discount, my friends. Premium to discount. $460 subscribers this morning. 460. This is crazy. I love it. We're getting the word out there. helping people out. If it helps your trading get that much sharper, I'm totally cool for that. I like that idea. If you're going to join our Telegram channel, please be respectful. It's a simple thing. Just be nice to each other. I don't know how it becomes difficult for some people. Just because you have an opinion about something, and if you don't like something somebody says, you really, that's what they say. I think it was the Dalai Lama who said, a smart man knows what to say, and a wise man knows when not to say anything. And there you go. From there to there, you've just made yourself 20, 30 handles. Array to array, my friends. Right there, you've just got almost no drawdown. Well, you don't if you're in this box. You got no drawdown, and you've come back into here. Collect your dividends and move to the sidelines. Move to the sidelines. Yeah, so if you're going in there, say something. If you've got nothing nice to say, just because you have an opinion doesn't mean to say you have to type it. Just be nice. Why can't people just be nice? You don't have to sit there and WTF this and, don't be oversensitive. I know it's hard. It's two-dimensional text. But look, if you're not encouraging somebody, then you're being negative. Keep it to yourself. I'm not interested. I don't want the drama, and I don't want to have to police every little thing somebody says. So, police yourself. Just be kind. Just be nice to each other. Help each other out. Nobody has to form fit to your value and belief system, man. Just be kind. Tolerance. Kindness for one another. That's all we need. There you go. Full fill now. All the way through. Lovely, lovely. Have a nice day. Now, we've got a flip one way and a flip the other way. So sit on your hands and wait. Wait, my friends. You just snapped off, what was this? Even if you took in low here, 380 down into, even if you got there's 20 handles right there in 1 minute. We did 10 handles there. Now you got another 20 handles there. You're up 30 handles already this morning, my friends. 30 handle. And if you took this one here as well, for these, you're almost 100 handles up this morning. We haven't even started yet. We haven't even got to 10 o'clock. We haven't even got to 10 o'clock yet, and we're trading inside a big messy consolidation like this. And yet we're still hauling pepper serves. We're still hauling some ducats off the table. No nightmares. Wow, okay. It's obviously me then. I'm fragile. Simo, how are you doing, my friend? Good morning, good morning. There's the swing below. Now you want to see, I want to see it really start to drive down here now. So this price like we had up there, look for here now. You really want to see it get down into here, below the rejection block. So that little swing point right there, above the high entry, if you're still holding it, you're scaling out your portions on the way down. You're in a killer trade right now. Look for a run down into these lows here now, and this is the price leg I'm looking for it to complete today. Would be nice. Go down to here. Oh, we could get this nice little delicious run down into the daily candles we've been calling for this all week. Come on down. Come on down. This could be your huge run for the rest of the day. If you're chasing this, if you're piling in on this, you have no logic other than you're chasing a candle. And if you win this, you're going to celebrate and you're going to say, yeah, yeah, yeah. And all you're going to do is reinforce bad behavior. I've been on these before. You catch them and you're just catching a ride down and you're slapping yourself on the back like you're some big prize trader or something, that you caught something massive. No, you threw the dice and on the downside. I'm listening to Tchaikovsky's Waltz of the Flowers. Very beautiful. Oh, that's great. I love the fact that people can actually, because of my ADHD, I can't focus on anything but this. I can't have distractions. I can't have a conversation. If my wife and I are at the pub or something and she's trying to have a conversation with me, if I hear somebody next to me having a conversation, I hear nothing about what my wife's saying. I am so easily distracted. If the TV is on, I have to turn it off and say, here, let me give you my full attention. So listening to music, I like to sometimes have an audiobook playing, and I've gone through a couple of hours of the audiobook and I have no idea what it said because I'm too busy looking at something else. So I admire that you can have music. I love that in university you'd have these people that would study with their headphones on and music's just blasting, and I go, how the hell do you do that? How do you study that intently and get any knowledge in that head of yours with all that music playing? But some people love it. It creates some harmony in their brain. So keep your eye over here and this daily fair value gap below us. This is the price leg finishing up here. Doesn't mean that it won't blast through it, but that's the price leg we've been looking for. Anybody stay in this one I gave you this morning? Anybody stayed in that? Tell me somebody's got it. Good morning, Derek. How you doing, buddy? Where do you enter in on the down move? Right here where I gave you, up top. That's where you get in on the swing. And you're just killing it right now if you're still in that. If you scaled out here, this is a good thing too. I like this. Because if you scaled out right where I was talking at this guy here and it did all this, if you are talking to yourself in a negative way here, you're in the wrong, you should not be trading. You should not be trading, because beating yourself up over missing this means the decision you made to get in here, you're going to beat your brain's going to beat you up for getting into a decision here like you should have. You're acting on a decision that you made up here before these candles formed. That was your objective, and if you hit it, celebrate that. If it does this, who cares? If you leave a piece on to run the low and it runs the low and you get out right there and you go, yeah, I nailed that range, and then all of a sudden it books it away and you go, whoo, that's awesome. Look at all the liquidity we get to get back in on when it comes back up. Don't beat yourself up over missing that. What you say to yourself right now is so important for building a positive theta wave mindset. Do not beat yourself up for missing that if you missed it. The fact that you see it and you get a little piece off of that, and we took a piece off on the way up, a piece on the way down. Hot diggity dang, man. I'd say we're doing pretty awesome trading. Now, if that's your overall bias for the day and you get in here right at an awesome time like 10 o'clock, if that happened at 10 o'clock, I'd be like, stay on the wagon, let it ride. but we haven't even hit 10 o'clock yet. So right off the 9:30, it gave the false Judas swing up, the manipulation to the upside to take out buy side liquidity, because it wants to drive all these guys who want to go short here. It wants to drive them up, take them out, and then slam back against all these people that are trying to go long. So engineered liquidity, slam it up against them. Great place. I usually like to see that around 10 o'clock though. Would have been nice to see this baff around in here, then run up, do that, and then catch this on the way down at 10 o'clock. That's typically what you'd like to see. But that's fine. If it runs all the way down here, takes out these lows that we're looking for 10 o'clock, and we catch the reversal all the way back up into this. Oh, deliciousness, folks. Your day isn't done. Don't beat yourself up here. Get excited about when this gets to pay you. Because these big, bold candles, they got nothing in between them except nice liquidity pools. Yeah, La Marita, I agree with you. I think we're going for those daily lows now. First of all, that objective getting hit, and then the daily fair value gap, that's the next objective, and then obviously the swing points on the daily. So I'm looking for here, then start running into the fair value gap, and if we just get another wick in, it'll be wick, 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 wick. All these attempts to get down here that keep failing. This one may just come all the way here and snap back again. But if it snaps back, we're going to see it right here on the 1 minute chart before it does that on the daily. So we'll know these areas of sensitivity, we're looking for them now. And if we get nothing here and it continues to blast through, that's the next area of sensitivity. Then this one. Then this one, obviously, main threshold, those equal those down there. So each one of these are areas of sensitivity that we're looking for. There's multiple PD arrays on the daily that we're looking for, and we're just looking for confirmation for a reversal on the 1 minute chart, and we'll catch a run back up. And then it'd be a matter of either managing, how you manage your back end or front end is entirely up to you. Lows have been run out. This low hasn't been run out yet. I've got that song going through my head. Love me like you do. Yeah, love me like you do. What are you waiting for? Yeah, you don't tune in for my singing. La Morita sin too. I'd rather listen to Tchaikovsky than you singing your Love Me Like You Do. Like the live. Yeah, I just switched to daily time frame and it's too far away, but hey, NQ can do that. We don't know. Haven't even started today yet. So watch now, we're waiting for a swing point to happen here, right? This could be the next price leg down, so keep this in mind. As soon as I see these pullbacks like this, I think, is this a potential turn point? And then I go, what on the side at 18,096 or 18,100 big figure gives me the indication that we could be going down that far for the next price leg. So what is down at 18,100? 18,100. Well, looky here, folks. 18,100 is right here, below that low. So I want to see it get below here, come back into that. Stop loss goes here. That becomes a breaker. Find some support at it, continue down. And make stop loss tight. Because then if you start eating through the breaker to the upside, you get out before your stop loss gets taken. You shouldn't get that whole breaker eaten. So you wait and see now. We're going to wait on that. Abby. Amorita likes how I sing. I'd love to be able to sing a nice Spanish medley for you, La Morita. Oh, here we go. Love me like you do. Breaker, breaker, 1-9, is anyone there? Come on back, truckers, and talk to Teddy Bear. You all remember that song? Anybody remember that song? Breaker, breaker, 1-9, is anyone there? Come on back, truckers, and talk to Teddy Bear. That guy used to do, back in the day, he used to do all these songs that used to tell these really sad stories. I can't remember the guy's name. Red Skelton? I'm not sure. Anyway, my ADHD mind off to the races again, somewhere else. You have to excuse me. At least I don't go on these major rants. Sometimes I go on a little rant, but it's either an educational rant where I want to kind of share something I know with you, whether it's anatomy, physiology, some sort of paramedic thing, personal story, anything I think is going to help people, I'll kind of share it with you. So take it with a grain of salt, my friends. He says, I'm only here for the silver bullet. This could be your silver bullet, my friend, for the short. Or this one here. Do you ever have songs where they kind of play inside your head and it just, you don't get the whole song, you just get part of it and it just keeps looping and looping and looping. And it goes on for hours, sometimes days. The same damn song just spins around and that same phrase over and over and over again. So my failsafe is here. Obviously, you have a breaker overlap, so I'd have to say it's got to take my whole stop here if I'm wrong. We have a breaker and a breaker overlap. That one there runs down. This one here runs above that high. So which one do you take? You could come back to this guy here. I don't want to see that inversion give way. So my fail-safe's really right here. If the body trades above it, come back to it, I'll get out. Take a smaller loss than the big hit I can take if that runs above me. So we got 19 seconds left. Mean threshold is doable. 10 seconds. Watch this inversion here. 3, 2, 1. Boop. Right on it. All right. Now, ideally, I wouldn't want to see it cross above that again, but we still have the mean threshold that it could reach for. And it could reach for rejection block as well. If your rule is, I don't want to see it break above this, then stick to your rule. It may run you out. Your stop loss might get taken before your fail-safe works. Right now, the fail-safe is still in place because we haven't had anything trade above it yet. These wicks can do the damage. If it runs all the way up into rejection and then hits that thing, that's fine. If it squeezes us really close but doesn't take it out, just hits the rejection and comes back down again, then you're going to be like, whew, our stop loss worked. Our fail safe, we got 2 seconds left now. See how we traded above it? Now I want to get out before it gets back there, so I won't let it. If it touches that high again, I'll get out. I'm out. That means we're heading up higher. And of course we are, because I just saw this now. We have a swing point below. See, I got caught on it again, you guys. I got caught again. See the swing here? Body trades above it, right there. So if we get back into this, it's a long for that high. Or at least for this premium array, which is that guy right there. So you're kind of in a consolidation now, right? So keep your eye right here now. Dang, I got caught again. You marry the idea of going short, looking for here, further down. That's my influence. So I want to marry that idea where we could say, well, maybe it wants to come back into a higher array. So you get off of here to come back into a premium array. You can continue down lower for a run down. So keep your eye on this and then look for that. If that goes out before that, then you sit and wait, because then you look for, is there a swing back this way again? There's rejection. There you go. There's the high taken. So my stop loss would have got taken and my fail-safe worked. So another good reason why fail-safe, for me, the fail-safe rule works for me. That's why if you enter right close to that fair value gap in a premium array, you want to say, well, that's my support to go lower. You're right there. So if it fails and you trade above like that and it opens above here and starts to trade up, close out. And that's all the loss you take instead of that whole loss way up there. That's a fail-safe rule. That's my fail-safe rule. Again, it's not an ICT thing. That's just my thing, but you're welcome to it. You can call it your own if you like. I don't care. You want to market it like it's your really cool fail-safe? I don't care. Make money on it. If it makes you happy, just pass it on to somebody else. Abs. Running late today. ICT answering our question we had the other day on how to manage it for a longer time. Oh, did he? Let me get over there. Stand by. Answering our question. Morning, folks. It looks like I'm fortunate to cover where I did yesterday. Anything we're going for technical. What's this with you, please? PPI release. Something to study. Okay. I see what you are doing, Mr. ICT fellow. I see what you're doing. That's another interesting slant on the I like that. That's a nice, interesting twist on that. I'll have to keep that one in mind. Keep your eye right here. I have to remember that. Those of you who are on his mentorship, look at his picture he's got posted there, that very first one. He says something to study. Tell me what you see in that specifically. That's a variation on a reverse model I like. By the way, my wife did not pass away yet. She's merely stopped altering, accepting the fate she's been dealt. Oh, it's so sad. It's so sad. She won't be around much longer. But I saw her in Jesus' name last night. She's ready. Oh, it's so sad. If I was making an NQ this morning, I would send it above the relative equal highs, fair value gap, and then slam it to the sell side during the opening range. Stopped at 352 profit. Patience indices make it hard for them to run. Until we have that consolidation daily, we're just choppy, short-lived runs, baked in the middle of. This is a rule right here. You guys are going to have to play with yourself. Look at those two candles, and what rule are you going to develop around here? What is your way to manage those two candles? Yeah, I'd love to see that too, Michael. Totally love to see that. So now get ready for heavy here, it'll be nice. Partial, let it run, stop. Partial profit, at least the point I have to stop. Breaker. body trades above. Look to return to this now to go higher. We didn't get, this is where you have to decide whether or not you would have caught that long right there at those two candles. How you manage that, you guys have to develop your own rules around how you manage swing points and how you manage your inversions, your fail safes, whatever work for you. If you have fail safes, you may not have them. You may just rely on a stop loss and an end point. Tristan, that low swing is reacting off the new week opening gap. Could be good reversal opportunity, and Dixie is hitting a premium rejection block. Could that have been our silver bullet? This one right here would be, I would say, would be a nice silver bullet for if we're going long. If you're going short and you took that as your silver bullet, you just got your stop taken. That's why I don't trust that whole, not that Michael's wrong, I'm not finding, unless it's following your trend, it's not the best place to take a silver bullet. I like waiting for that first 10 minutes to end and then go in after 10 minutes, 12, 16. Here's 6, 9, 10, 11, 12, return into here. Anywhere inside this would be my silver bullet for a long, provided you're looking for a return to a consolidation, cam model to cam model. You're running in between here, you're catching that range. So it would have to come all the way back into here or there, midpoint. Either one of those, all three of those entries, stop loss goes right here for a run higher into a premium array. And don't forget, you're already getting close to your premium array, if not already in it already. You pull your fib tool from top to bottom here. Come on. Fib tool top to bottom. There's your 50% right off the button. Continue higher. We've just got into the premium, roll all the way back down into a discount array. Old highs. And then continue to the upside. Next price leg up. And then you turn around and slam that right back down and start looking for this wicks in here again. But until then, I'm bullish again now. I'm bullish right here. I just couldn't get in there. That doesn't fulfill a rule for me. Those two candles. Hit the like, people. Follow the rules, be patient. I love that. Thank you, sir. It's nice when somebody else says it. And I don't have to sit there and beg and plead for likes. If you like it, you like it. Thanks, Simo, for, by the way, I saw that you'd reposted some of the stuff that I put on Twitter there. I appreciate that. Appreciate that. So here's the thing. We don't have a swing point, right? We haven't broken any major highs unless you consider this. Now, I want to see a significant swing point to catch a reversal. This could be just a retracement back into an old high, a breaker, small candle runs above these highs, breaker. So breaker, they're overlapping right now. So the bodies are in line with one another. So I'd like to see it come back into here. And I'll put a stop just below that. All I'm trading is the breaker. And I'm just aiming for up here or this order block here. Again, you don't have to take don't take the same trade I'm doing. If this doesn't follow any logical pattern that you're looking for, don't copy me, because as you see, I've already taken a hit. I'm up on the day, but I caught a lot of that stuff in London. Here's your just leave that open now and push that higher. I'd be all right with that too. And we don't even come back down into here. This inversion can hold price. You may only get the top of this inversion. Just have it. I do like the breaker idea though. So I'm just going to trade that one little skinny breaker right here. At least Michael can make an omelet this morning. I can't make an omelet. I got no damn kitchen. I just got cabinets. Everything's all piled up there waiting for someone to come in and finish it off for us. Back to the order block here. Look for a discount array. Like array to like array. It's not a breaker. It's just an order block to order block. You've run back up. You traded below it. You came back up into it. Now I want to see it continue down. $9.47 is the SIBI for optimum trade entry to go lower. $9.47, he says, is the optimum trade entry to go lower. If you can get back off this Cam 1 model here for a rejection back down into, that's my objective right here, is just somewhere inside this Cam model 1. I'll keep trailing that stop loss up super tight, so I'd look to get out here or here, and I'll be careful on how that one works itself out. And if I'm wrong, it's obviously going to come down and take me out first, but if it pops down and we have a body close and it comes back up, I'll break even and get out of that before my stop is taken. So there is a fail-safe there, but a weak one, because we may just run straight through that. So look at these equal highs here, this inversion, and those breakers. See what kind of reaction we get here. See how right now we're inside this guy? See where the wicks end up in 16 seconds? Morning, Tesla. I know he likes to be called Greg, but for some reason I just like to call him Tesla. I got Tesla and Lambo now. Simo Show, you deserve more. Oh, thank you very much. You're very kind, sir. Thank you. Furba. How to calculate NQ contract size. Derek is your man. Derek, how do you calculate contract size? Anybody know that? Anybody help out Furba there? La Morita, I just bought a little machine that boils eggs and does scrambled and poached. You can have a little, just add a little water, and you just need a stove. Oh, huevos. Huevos rancheros. I do like a good huevos rancheros. %. Oh, here we come on the run with a burger and a bun and a big wide happy ear to ears Kool-Aid smile. You remember that one, Kool-Aid? I don't know why that's just ripping through my head all of a sudden. So my song is gone and the Kool-Aid song is popping into my head. Oh yeah. You guys can say it. This is what goes through the head of somebody with ADHD. I have all these things ripping through my mind over and over again. something new comes in, it helps to keep the trauma away. It helps to keep away some of the nasty stuff. My mind's constantly in a state of trying to process stuff and avoid all the terrible things I've seen in my life. So we're going sideways. We're inside this fair value gap. See how we're still closing above it? I want to see. Just come down, give me a little kiss here. Take me on a date. Come on, give me a little kiss. Come on, lad. Give us a kiss. Take us on a ride, lad. Or if you're Scottish, give us a wee peck, lass. Just give me a wee peck and take me on a ride. Take me on a ride out to the glen. I know, those of you who are Scottish out there, my Scottish accent sucks. Every time my wife and I go somewhere and we go to a new culture, we like to try and mimic the accent, not in a derogatory way. We just are fascinated by languages and accents. And from my acting career, it was not really a career, but my acting that I used to do back in the day, we used to work accents all the time. So here's one of those little consolidations with a building cam model. Which cam model do you want to use? Wait for the displacement, and it will tell you whether you have a cam 1 and 2 or 1, 2, and 3. For example, consolidation, displacement. So this is your manipulation. Consolidation, manipulation. So cam 1, cam 2, and cam 3. You break above, you come back down. We're looking for a cam 1 model. And I don't want to see it get below that. I just want a cam 1 run for a high. If that high gets taken out before, I will close this out and say, oh, look, there you go. Just return to that old high right there. That's all it needs. We don't even need to come all the way back to me. So that high is what they hit. Fair enough. Hit the top of that inversion here. Found support. Up to the breaker again, or the order block again. Come back down into this order block now. Now you're looking for other higher prices to push above here, and then I can close this because that's going to get taken before now. That was my objective, so if that gets taken, why bother? $27. This could be a dive. I want to see a wick forming in here and this push higher. Christian, thank you very much for helping him out. Appreciate that. Oh, chorizo. I do like a bit of spicy chorizo. I'm English. Anything that's not fish and chips is spicy. For us in England, we're not really spicy. Though the Indians, from India, you guys have brought over some awesome food to England. We do love a nice curry. I do like a nice chicken tikka masala. And I'm training my palate to go a little spicier than ketchup. So I like to have it a little spicy now. So the East Indian people that make it, they sit there and go, oh, white guy, make it super light. Don't throw it, just kind of tease the peppers over the masala. They don't know how to eat real chicken tikka masala. But I have some friends that like it like thermonuclear hot. I can't do that. But I do like a nice tikka masala. And chorizo, ooh, that's spicy for me. That's a spicy sausage. FIRBA NQ, one handle, 1 point on one contract is $20. Go to the position drawing on TradingView and the little gear, and you put on the amount, the size you want to put, risk the money you want. Oh yeah. So if you want to put a trade on, for example, I think, crap. I'll take my $15. Yeah, usually it pops up here. I have my wheel to do an instant placement. I have other ones that as soon as you put that on, you can decide how much you want to put on. It tells you how much per tick, how much it's worth, what your stop loss is going to be, so on and so forth. I'm sure if you look for it on YouTube, it will appear. Is that, or just memorized how many handles of risk for a mini and a micro? Yeah. Consolidation, break above, return to consolidation, or you might incorporate all of this as well. Lovely. Continue up to the upside. That's what we're looking for. Now watch for over here. Keep your eyes on the fair value gap here. Good. Now you want to drive above that, hold on top of it, and continue pushing higher. We're getting into our CAM model. So if you're trading CAM model, which you wouldn't have got that one, consolidation, you wouldn't have got a CAM model here either. So if you're going from here to here, it's already been done. If you are trading those two candles I told you about right there, how you treat those two candles are important for your rules. Otherwise, there is no trade here. You really must study these two candles. And your silver bullet 11, remember that I was talking about after 10, 10, 10, look at the silver bullet and you get your silver bullet here. You have multiple attempts, 1, 2, and 3 levels of silver bullet entry you could get into, aiming for at least 10 handles right there. You made your 10 handles. Stop loss would be slammed right up against break even, and you're looking for your first scale out here, second here. And if you guys want to aim for that up there, then you're missing a whole ton of PD arrays. If that turns around and comes back on you, you'll go, why the hell didn't it hit that? Well, pay yourself, man. You don't always have to hit it out of the park. That's hitting it out of the park right there. You got a perfect exit. Move to the sidelines. Smile to yourself and say, I nailed that sucker right there. Right? That's all the juice you had left in that from there to there. And you were aiming for up here. And that's 20 handles easily, 20, 30 handles. Bank in your pocket, sit and wait. These things happen all the time. We called multiple trades already this morning. Multiple trades, multiple entries that you could have got in on. So you keep adding up these 20, 30 handles, 10 handles throughout a day. If you're a 2 trades and I'm done person, then move to the sidelines with your 20 handles or 30 handles and wait for tomorrow. Just sit there and study price action. Because the studying of price action, when you start to see something, then I say to you, what's the psychology? Is it telling you to get back in, or are you committed to only 2 trades? If that's your rule, stick with it. Even if you see these awesome things, do a bunch of paper trades. Say, yeah, I nailed it. Yeah, I nailed it. I don't care. I don't have live money in there. Yeah, I nailed it. I only do 2 trades a day. That's it. Stick with the rule. If you start to challenge your rules, why bother even making any? Because then you just look at lack instead of abundance. You focus on abundance and you go, I just did my 2, I collected, moved to the sidelines, I got some money today. Now I'll look for more abundance and go, oh, look at it. It's just so abundant. These trades are all over the place inside these charts. I get super excited about them. They're just happening all the time. I'm going to get better and better at it. So tomorrow when I do my 2 big trades, maybe I'll be on a milk it a little bit more. Or maybe I'll just take my 20 or 30 handles and move to the sidelines again each day. By the end of the week, you got over 100 handles. 100 handles in a week. You're going to get rich doing that. And if you nibble it like cheese, I had a buddy, my buddy Kevin. I think Derek would remember Kevin. Kevin was, I think, my 11th subscriber. He's a corrections officer down in New Jersey. And he was doing ICT for 4 months, started a funded account. He got funded within 2 months, just nibbling, just taking 10 handles at a time. He'd wait for the silver bullet on a 5-minute, enter in, take his 10 handles, run above a little high or something, and he'd be out. He'd do that once a day, and he'd just keep doing it. It took him 2 months, and he managed to get his funded account. For somebody who had only done Michael's stuff for 4 months, this kid got himself a funded account in 2 months. Just nibbling like a little mouse eating cheese, my friends. Discipline. He's a corrections officer. You would expect him to be a little disciplined. And he's former military, or was that another guy? I think it was the engineer. I think that was Josh. Anyway, or Joseph. But disciplined. And he just did that. And he was quite happy to move to the sidelines and wait for the next day. Collect his little piece, move to the side. Before you know it, he had a funded account. Really, the psychology of trading is what you really have to get a handle on. Once you understand the price action like this, you won't care about missing big long runs, because you know there's more coming around the corner. There's something happening all the time. Every hour there's something. You're going to find some setup every hour. So why be upset with it? Why beat yourself up? Feed your brain positive thoughts. Who said it? Top of the breaker to you, lad. Top of the breaker. Top of the breaker to you, lad. Furba, recently I got hit. 446, take profit. But unfortunately my amount risk was too low. It was 0.25. It was too silly. See, listen to the way you worded that. Listen to that whole sentence there, Furba. Is all talking about lack. Unfortunately, my risk was too low. I didn't get much. It was too silly. Those are all negative things you're feeding your brain, my friend. You walked away with 0.25%. If you made a 2.25, if you put 2 nickels in your pocket, you high-five yourself and say, man, I walked away with some cash today. Don't beat yourself up, because that's the negative things. Just in that little sentence, look at how you talk to yourself. It's important. You want to get a ThetaWave mindset? You got to be positive. These things are happening. You didn't miss anything. You didn't miss anything. All you've done is just reinforced in your brain that you're bad at something, that you didn't get it. It's lack. You're always going to focus on lack, and that's all you'll ever get. Focus on abundance. If your abundance starts off with 2 nickels in your pocket with a 0.25% win, celebrate it. Rub those 2 nickels together and you say, "Oh yeah, baby, we're going to turn those into 2 dimes. We're going to rub those together and we're going to turn them into quarters. And I don't care if it takes me all week to make $1. My brain is going to be focused on abundance. Money flows to you and through you. If you try to hold on to money, it will not flow to you. If you resist it, it will not flow to you. If you're negative about it, you repel it. You've got to attract it into your life. You've got to attract it with positive thoughts and focus on just watching price action. The money will come. The money will come. I'd rather hear you say, there was an entry, I tried to get in on a breaker and it traded against the breaker and took me out. I wonder how I could look at that differently in the future. What kind of feedback can I get on this? If all your focus is on money, that's you're completely missing the whole purpose of the charts. None of this means dollar bills until you interpret what it means. And you can make dollar bills off of those candles. There's no dollar bills in there until you understand what the hell's going on there. Like Einstein says, you got to understand. That's the point. Understand what's going on. Those dollar bills will come flying through the door and you won't care about losses and wins. You just focus on trading your plan. Plan your trade, trade your plan. Anyway, that's my little rant. I'm all behind you I really am, man. But you got to change how you think, how you talk to yourself. Really important. I'm right here. Is that Kevin? I know who said it. Is that you, Kevin? Nope, nobody else. It is Kevin. Who said it? Ladies and gentlemen, let me introduce you to Kevin from New Jersey. Everybody say hi, Kevin. Who said it? La Morita, I'm your 444 subscriber. Oh, 444, baby. There you go. 444. I was going to email you back this morning, but I know I was staying up. I tuned in just in time to hear you talk about me. There you go. Yeah, Kevin Spinner, he was right from the beginning. He took a little sabbatical, working his butt off in the prison, keeping you guys all safe down in New Jersey. Thank you for your service, sir. So true, Ferb. Okay. It is then my immature psychology. See, you said it again. Immature psychology. No, my friend. I'm going to fix it. Get excited about it. You're not immature. It's just you are developing. You're getting feedback. There's no failure here. It's all feedback. You just take it and go, yep, I like that. I'm going to use that. Put it in your little pouch. March down the street. Chuck all the rocks out of the bag that you carry in life, through the little backpack of all the rocks you've carried from all the bad relationships, all the negative things people have said to you and said, here, you're a bad person. Here's a rock. Put it in your backpack. And you carry that thing through life with you. And you go, how many rocks am I carrying of all the people? And I tell you, the quality of a person's character is built upon, their foundation is built upon the rocks that other people have thrown at them. So take all those rocks out of the backpack that you're carrying all through your life, of all the shit that people have said to you, and build a foundation with them. Turn those rocks into a foundation that's solid and builds you a platform you can launch from. And all those people who sat there and threw rocks at you will go, oh, I've thrown all my rocks away. I have no foundation. I've gave all of it to somebody else. They took that negative energy and turned it into something positive. They built something from it. Or you can continue to carry your rocks through life with you and let it weigh you down, my friends. It will weigh you down. Get funded with just a silver bullet. Base hits will get you funded and paid. That's right. Base hits, my friend. Base hits. I agree with you, La Morita. Live life large. Live it with so much love for yourself. And that's not arrogance. Don't mistake love for oneself as arrogance. I think Oprah said it when she said, be full of yourself. Be full of yourself. And not if you love yourself, your vessel is full. And there's more of you to give. And you attract the same kind of people into your life. That's what I want to attract here. I want to attract positive people that just, oh man, you're so excited about getting in the markets. And you're patient. You wait for your setup. You get in, have your fail safe. Your stress level will drop dramatically once you understand this stuff clear. There's no rush. If you see people succeeding, cheer them on. Your day is coming. Your day is coming. Stay with it. Stick with it. It's taken me 7 years almost now to get here. Oh, it'll be 8 years in August. Holy smokes. 7 years has taken me to get to this point. And I only just started going live in front of people. You want to know how to get uncomfortable? Take what you know or what you think you know and bury yourself to the world. share your trades with the world and how you read the charts. They'll let you know. Though you get public feedback real quick whether you got it right or wrong. But I hope you forgive my shortcomings. I will learn from them, and I will point out where I failed and get the feedback so that we can all learn from it. So if you allow me to make my mistakes, hopefully it will prevent you from making your mistakes. I haven't been around because lack of staff at the jail. But you guys need to realize how helpful and positive Darren is. Aw, Kevin, you're awesome. I've missed you, buddy. I missed all our little chats we used to have back in the day. You, me, Derek, and Lori. I think it was just 4 of us having like regular chats every day. We're behind you, Furba. I want to see you succeed, man. Get that theta wave mindset. Get that ultimate theta wave mindset. That's what we're after. Just a clear mind, no stress, clean entries, clean exits, fail safes, so that when you trade this, it becomes so monotonous that you know what your entry's going to be, you know what your exit's going to be, and you're happy with whatever happens. And if it turns against you, you're going to know how to get back on the horse. We can see when the market's going to switch directions. And we're happy when it does that, because then you say, great, it's made a little turn. We've traded below. The body gets below here. See that? Pop! You pop up inside it. Now you get short, running for a low or a discount array. Inside a range, look for your discount array. Get out of your mean threshold. Look at that mean threshold holding beautifully there. Want to go to rejection block again? You don't get your lows. What did you get? Rejection block. How many times have we talked about take your money at rejection blocks? So if you would have popped in here and just took it out at the rejection with a perfect entry, we'll say right here, you got back in right there at 15 all the way down to rejection block 86. So you've got 30 handles there just in that 1-2 minutes. Move to the sidelines. It's Kevin's cheese philosophy. Kevin, you make the best cheese, man. You make the best cheese. I don't know why you have to be Italian in that one, but whatever. It's the best of the cheese. I love it. Here's your inversion now. We've come back up inside, finding support in here, breaking down, get below it. Now we're pushing through for the further sell side liquidity. Look at this range. Run back up. I bet you'll find that you've run back up into 50% of that range. Let me pull this so you guys can see. Sorry, I'm not calling every candle. I'm too busy blathering away here. There, 50%. Pop just up into the premium array so we can get down, and I'll take your lows. Love it. Look for the next price leg down. Back into the breaker again. Hey Fair, one of the biggest improvements of my trading for the better has been trading one account until I hit a modest profit target. I use $200 to $300. If I have a runner, move to the break even. Perfect. I miss coming home after an 8-hour shift trading, learning. Then I'm stuck there every 3 days for 12 to 16 hours. Not so much fun. I watched the stream and inmates were asking me what I was watching. Now, see, wouldn't that be cool if you could do a course for the inmates? Man, you talk about teaching people how to make their own money. They don't have to steal it from somebody else. That'd be awesome. I'd love to come to your penitentiary and teach your inmates how to do some trading. I've taught at penitentiaries, Stony Mountain Penitentiary in Manitoba. I have to guys tell you, I think I've already told Kevin that story already before, but yeah, my teaching career has been quite broad and exciting. That'd be fun. Yeah, you could teach them if they're interested. Say, hey, yeah, I'm learning how to trade the markets. You become their most favorite guard for sure. I switch accounts to another AFX or combine until I get 2 to 3 in the account, then move to the next account. Nibble off profits each day, rinse and repeat. Don't look for home runs. You'll get those evals passed and take profit sent you to the bank account. Yes, yes, yes. Totally agree. And I only trade micros, and I've gotten very good at scalping out easy, low-hanging fruit. Take profits. Small wins add up to a full salary. Absolutely. If you think about it, every job you have, they don't say what they pay you per day, right? Think about the logic here. When you go to work for an hourly wage. An hourly wage. Think about these as hourly wages. Pay yourself your hourly wage. You keep collecting. Each candle is payment. You keep collecting. You pay yourself $13 an hour, $10, $5 an hour, whatever your minimum wage is. Look at those candles as that's minimum wage. I just paid myself for an hour. After you've done that for a whole day, you get 8 candles of your day, and you say that's worth, every candle of those candles are worth $10, $20 an hour, whatever your minimum wage is. I get 5 candles, I move out, I've paid myself for the day. I'm self-employed. What's wrong with that? Whatever your metaphor is, man, whatever your way of validating, justifying, but focus on reading the tape. Understand it. Don't know it. Understand it. Integrate it. Watch every candle. All those people that popped in and popped out again because we're not giving them trades and stuff. They don't want to study the charts. You got to study it, man. This is the stuff that gets boring. But if you watch carefully, you go, okay, now where's this going? You were inside these two candles, mean threshold. We got to either lose this candle's mean threshold, go to the rejection block, and then come back down into this candle's mean threshold or rejection block. Or we've got to start pushing straight through here and start running for these highs and start a little run up, and we get support off of the mean threshold of this candle. So you're stuck between here and here right now, mean threshold and mean threshold. So it's going to run out of PD arrays to bounce around in. So it's got to go higher or lower or really high, really low, or below the range. When you start to understand price action like this, you'll start to, all this other stuff doesn't matter. All these daily stuff is going to get super accurate. And now you're saying what my daily bias is. If I can catch a daily bias at 10 o'clock in the morning on a run, you just let it sit there till 2 o'clock. You've caught your low of the day. Just a 10 till 2. See how we just came right back into the mean threshold again? Bang, bang. You're stuck in these two. Just going, I got running out of arrays. I got to go somewhere. I've got to extend. Rejection to rejection or high to low. I can't stay in here too long. So in this consolidation, you go, oh, I like this. Some people go, oh, the market's not doing anything. Yes, it is. It's setting you up for a CAM model, a CAM 1 or a CAM 2 right now. Get excited about that. Say, ooh, any second now, you're going to give me a CAM model that I can play off of. So then you start to build your plan and say, if this is my CAM model, my CAM 1, obviously you don't want to be just running to that because that's not getting you anywhere, right? You don't have really big runs to the in-between line here is not that big. So you're just going to say, can I get on top of this and start running for an old high or rejection block? Can I get below this and start running for breaker, a lower time frame array, or a lower order block, fair value gap down here, breaker, fair value gap? Can I start reaching for that? Now, would it be nice to see a manipulation up into here? That's your CAM 1, 2, and CAM 3 manipulation with the distribution down below the lows. Get one opportunity to get back in on it and run for your breaker. But don't forget, you've got a breaker sitting here as well. So manage your back end. You're in a really tight scalp here. If that's something you're interested in, you might be going, I'm not dicking around in that. There's no fun in that. But paper trade it. Don't even, not a paper trade account, but take a piece of paper and say, I want in here, and I write my number down there. Does it reach it? Good. Paper trade it. Practice it. See how you're running out now? It's just wicks, little tiny candles. I've got to do something. I'm totally running out of arrays to play in now. I've got to extend. So you wait for this compression you see happening. It's just it running out of its arrays, and it's not going to reach back for higher premium and discount data points before it breaks out. That's all. So it's not boring. It's exciting. It's about to do a little surge on you. Get excited. Need to head out. Glad was able to jump in for a few green trades to you all. Darren, go to the email. I'll email you something later tonight. You'll enjoy it. Promise. Roger, man. I'll see you. Thanks. Have a great day, Kev. Take care, man. Be safe out there. That's good to hear Kevin back in. It's good to see Kevin come back in there. So, Derek, are you still around? Did you see him? I didn't see Derek in there. He used to hang out with us all every morning. We'd be in here chatting away about stuff. There's about 4 or 5 of us in here back in the day. What, 6 months ago? 7 months ago? Boy, we've grown since then. Very exciting. See what I mean? Now it has to extend down to a new array. Push down below the low. Are we going to run up now? Start making a little higher. Pokes into the higher arrays here. Or are we just going to slowly start to roll over and come back down? Just keep building and extending that range, extending the range till you've got a larger range to play inside. We're coming up for lunch hour now. So it's a consolidation trading model. I think I'm going to build one on the weekend so you guys can see a consolidation trade, how to trade inside a consolidation with your fib tool. Gold is so consolidated, he says. Oh my goodness, there's a long right here in gold. See that? That's a long right there. Stop loss goes down here or here. Look for your entries here, here, and here. If you want to wait for all the way down into here with the stop loss sitting there. The moment it breaks that high, peel out, move to break even, peel out. So kind of watch your gold here now. I'll even put a long in right here. If I get it, great. If I don't, I don't care. I want maximum juice. So stop loss will go down there. Ooh, that's 3,000 bucks. Sheesh kabibble. Oh, got 26. I don't want 26 handles. Are you kidding me? Sheesh. I don't want that. I want one. I just want a little small, little bitty trade here. But see, there's your first entry right there. If this takes off from here, then that's fine too. But there's your reversal pattern. Body gets above it, come back, tippy tappy, tippy tappy. You get to go long. Now I'd be like, wham-bammo! I'd slam that sucker right up against there, so I'm not taking any losses. I'd be right like that. So I'm this zero stress trade right off the bat. Gold is running. That's the long I just gave you, and I'm out. So FURBA, that's what you see when you start to get good at this. You'll start to see these reversal patterns. Pay yourself at the rejection block right there. See that? Pay yourself right there. You got this from here to here is, I don't know how many dollars that is. Oh, sorry, that's Bitcoin. It was Bitcoin. Sorry, it wasn't gold. My bad. It was Bitcoin. That's why it was 26 handles. Sheesh kabibble. That right there would have been thousands of dollars, like $5,000 right there in just that one candle in 1 minute. Anyway, you get my point. And that can continue going here and here. You'd be getting $10,000, $15,000, $20,000 out of this easily right now. And I'd be right in there. I'd be chasing this sucker up right there, locking in thousands of dollars worth of profit right there. It just took a high. Take your profit. Take some more there. Next one here. Next one here. Anyway, watch that sucker today. Watch it in the next few minutes. You would have made months worth of wages right in there on that trade. Again, you probably don't want to trade 26 lots on it, but 26 lots will get you easily. $5,000 was sitting here from there to there, so that's 348. So about 100 for every 100. And there's 40. There's 9. There's like 500. So 5 times 3. There's $15,000 sitting right there, just from that entry there to there. 15K. Anyway. So don't get upset, man. These things happen all the time, all over the place. They're just dropping them like bombs. They're dropping bombs, my friends. Dropping bombs. You just got to go find them, pick them up, stick them in your pocket. Not the bombs, you know, the dollar bills, the gold, or all those little fake Bitcoins. So if you're looking at this as a price leg up, consolidation, if this is a price leg up, we're coming in for a CAM 2 model. I wouldn't take a CAM 1 here. I'd take a CAM 2 because there's a fair value gap and it's in the discount portion of this little range right here off that order block. So you could take a CAM 2 model here. If it fails and you comes back up into it, then you get out and you're looking for a run below the lows. If it runs below the low, comes back up, take CAM 1, CAM 2, then I'd be looking at this thing as the reversal. So look, we've run the highs now. Look for this to break down below it. Now you get short right there. Let's do it. What the hell? Sell it. Put your stop loss right above it. We did get a little tiny. I'm just trying to play silly buggers here. I like to see a decent body get below that. If this takes me out there, then I'm really trying to squeeze juice out of a lemon here. And all I'm trying to aim for is something real quick and down and dirty here. Just going to try and grab that order block. $700 stop loss for a $500 profit. Not that fun. Might have to probably come down a little lower, but we'll see. That might be the rejection block. This might not be the drop below there. That's why you like a nice body get below that. I'm trying to really squeeze it right off there. So if this doesn't work out, it's because I'm really trying to squeeze that drop below that inversion there. Some people might say, well, that looks like more like it's sitting on the inversion. So we're going to see if this takes me out or finally rolls over and gives me a little bit of, if it does, then I don't know if you want to consider that a rule, but I like to see a body get there and pop that, like a nice clean pop through, not just this barely hanging. Like if I look at the close on this one, the close is 314 and the high on this one is 315. So it's literally one handle below that. So there, I'm in profit now. Now I'm going to slam that sucker right up against the back of that. Now if I get a bit of profit out of that, I'll laugh to myself and say, consider yourself lucky there, Chuck. Lucky Chuck. Come on down for 500 bucks. See how the rejection block doesn't saves you here? You didn't get the highs taken out. We're in a CAM model here. So CAM model 1. I want to go to a CAM model 2 entry. So I want it to come down here. You could literally go 4 on this if you want. So it would literally take the 2 out that's coming down and put you directly into a 4 going up or 2 going up. So you're buying and selling both sides of the market here. Yay, we made 500 bucks. So anyway, you get the idea. Order block, CAM 2 model right there. Now do we go back up again? Now, how many people were sweating when they saw this? And were you saying, oh, that's going up, it's going to totally take you out? That literally one handle. Don't count on that one handle to be your saving grace, but really that's the swing point right there for it to come back down into the range. I wouldn't really count on that. Was more of a roll the dice craps kind of play, hoping we could get that. Because when you think about it, we closed above it right here, and now you want it to come back down, get yourself out, close out your trade, in this case, it was so close to my stop loss, like, what the hell? Back into that range. That's at least consequent encroachment of that little range right there. So it's got to come at least back into there. So CAM 2 model starting to unfold. We want to see it get through here now for this to continue to the upside, because we've got a small consolidation inside a consolidation. They're touching each other, so you really can't trade anything in here. So you've got this order block right now. This one doesn't count because we haven't got above it yet. So you're between this guy here and this guy here. So this could roll back down into here, give you your mean threshold, which would still be a CAM 2 model, as long as it doesn't close below the midpoint of that CAM 2 model. You are a scalper master. So for CAM 2 is peeling out. So right now, if my entry was there, my stop loss was there, I'd be like slam right up against this right here, because that's 50%. Look, if you take our CAM 2 model that we talked about, and we're not, this isn't new. I was talking about this before it happened. There's your 50%. See that? Body stays on it. That is your CAM 2 entry, and you're running for PD array. And when you're in this tight consolidation, you should be taking pieces off at PD arrays. Now, you may say to yourself, it's not worth it for me to go in and risk from here to here just to get that little bit. So if you want to go to your rejection block, take a piece off here. Or you just let her buck. Now I'd be like slam. I've been moving from here into profit. And I go zero stress. Take your stress off. This is where FURBA, you can reinvest in your excitement. See, here's the rejection block. It hit off of it again. We did not take out the highs. And you'll say to yourself, if it comes back and takes you out, you go, damn, why didn't I pay myself? Because you're in the consolidation. You should be super scalping this. This is like super scalping. You're just trying to nibble quick profits. Now, whether or not you want to be in the middle of this kind of stuff is entirely up to you. If you're one of those people that like a high adrenaline, hey, you're talking to a paramedic here. I love a good adrenaline rush. I love to run into a burning house as a firefighter. So I love jumping off mountains with my hang glider back in the day. I got a hang glider hanging up in my garage right now. Haven't used it in years, but the rush of jumping off a mountain and feeling that little tug in your nether regions that says you're alive, you're not falling, you're just this big piece of paper floating in the sky. That's a rush, my friends. It's a rush. Fair value gap. So when I see this, you go, ooh, that looks like a nice little place to get off and start running higher. I'd like to see that above this first, though, and then come back into that to get a higher price. But, because this chances are it's going to roll back into our little range here. Take out the high. Start pushing up higher. What are we looking at? Remember that? I said you get to see, I just want to reinforce a point here. Remember back here we're talking about when to take your silver bullet entry, and I'm a bigger fan of taking it after 10 o'clock, like 10:10-ish. Wait for the wick of the hour to form. There's your 10:10, 10:11. Then we say there's silver bullets every hour. Look right here. 10:10, split, entry for a long. Strange, coincidental? I don't know. You guys can decide. Now you can expect the 16-17 candle to get into here. Look for 16, 17, 18 to come back into this to go higher. You want this to hold price now. It's now a breaker. That's a solid sucker. It's now become a senior candle inside a fair value gap. Fair value gaps are great, but they're not senior fair value gaps. Senior fair value gaps would be an inversion, perhaps. Those tend to be nice and strong. So we're at 14 minutes. Oh, we're going to come revisit it in 14. I'm all right with that. You got 1, 2, 3 entries, stop loss here. If you want to really go in long right. Because our fail-safe is the same thing we do every single time. Rinse and repeat. If it pops below us and closes below here, then it tells me I'm running back down lower. I'm probably running for these lows. If it taps it, the wicks come through this into the mean threshold of the breaker. We know this is a senior candle. Then we get a kick off of it. We're running for the highs. So a quick little run above the highs. There's your first one, your second one. Do we get the third, or does it stay open and we start running higher? Chances are it's going to come back in. Looks pretty consolidaty. Is that such a word? Consolidaty? Ferba, Kastaka dia. Kastaka dia. I don't know. So KTM is 8:57 now, and that means the New York time lunch is 9:45 to 10:45 in your local time, as we just had daylight savings time shift forward. Okay, I'm not focusing on gold and NQ. They are consolidating. I'm on FX right now, or Forex right now. It said silver bullet time, Darren. 16:17. Maybe this will be the 16:17 that I get. Pop in, give me my entry. And I'm in a consolidated environment here, right? And keeping in mind that I've extended this range up higher, this mean threshold is still in play. Okay, this could run right through me, take this guy out right into my mean threshold. I'm buying a premium to go higher. So I want this breaker to hold price. I just tapped the top of that breaker right there. I want the body, and I just want to come back and fill this. Sometimes it leaves fair value gaps not completely full. There, now it's in. Now I want to see it kick off of that. Now we're going to watch very carefully, because if it starts to trade below it, there's no reason it should start trading below it, except into the mean threshold. I'll give it that. If it starts trading through the mean threshold, I won't even give it an opportunity to run all the way through. Unless it just rips through there right now and takes me out, then that's fine too. So you want the wicks, you're allowing the wicks to do the damage. Thirteen, 10, 9, 8, 7, 6, 5, 4, 3. We want to see it close above that. If it doesn't, we get out. Close below it, so we're looking for the lows. And this is my part I'm working on right here. It popped back up, might give me an opportunity to get out of my trade at a break even right there. But because it popped down below the opening, I'm out, because I look at that as that could continue running down now. So I'm still working on the wick piece there. Shall I just give it the mean threshold now, or stick with the rule of it's closed below it, so I'm out? So if this runs up into here, I'd be in a bit of profit, and then roll over and come back down, take this out, looking for that order block we talked about inside that range still. We're in a premium and maybe reaching for a deeper discount here. And I think that's where it's just tipped its hat, saying we want to go lower. So you could go short here. We've run that high. We've dropped below it. Trade into it. Now look for it to go all the way up, potentially up to here, then go lower. SMT NQ with ES. What does that mean to you, Kyung? What does that mean to you? I'd like to know, because I've never got that straight, the whole NT and ES or NQ and ES SMT stuff. So here's the switch right there. That's the switch into, we're going into a different direction, you see? I'll look for this to take out here. So I could have definitely got back in here just to make back what I lost in that little piece right there that told me it was going to head lower. Right there, it ran back up inside, pushing for rejection block, order block. Key off of that now and keep pushing through. And there you go. There's your rejection block. Looking for this order block down here. It's a breaker. It's a senior candle. This one was a senior candle, but it was in a higher array. So it was right near the midpoint of that. So as we started trading through it, the moment we popped through it, again, I missed the fact that here's our swing. There's your reversal happening here. That breaker is going to become less important. The moment we pop through it, then you go, oh crap, right there. Ran through it, come back inside it. Now we're going lower, running out the lows. So even inside this little consolidation, you can see when price makes the turn. Run, swing, enter, tips its hat right here on that candle. Right there on that candle, it tipped its hat. That's why we got out. Otherwise, my stop loss would have been taken. So fail-safe, again, has been nailed. We've nailed fail-safe a couple of times in the last few days, quite a few times in the last few days. It saved us a sizable amount of stop loss getting hit every single time. So your fail-safe entry works awesome. Then we actually saw the setup then when it was forming here. So you could have got short there, offset the losses you had here, just to take them back and say, now I'm going to sit on the sidelines and wait. I lost it. Let me just quickly get that back. Now move to break even and wait. No stress, because you're just reading price action. There should be no stress in that. Until you trust them enough, you'll stress yourself out over it. But when you see it enough times, you'll start to go, yeah, I see it now. Okay. Stop loss goes here. If it fails above here, then I'm on the wrong side of it again. And welcome to consolidations. Now you've taken the lows out. You're really in profit now. So you take a piece here, take a piece there. You're in consolidations. From that entry right there, 310. There's 76, so there's 25 there. There's 35 handles right to the bottom of this one here. There's a little fair value gap down here. So look for it to run to here. All you see here is paper trading. You won't see me trade live. You'll see me trade demo only. Rito, that's all I do is trade demo accounts in front of you. I'm just showing you price action. I shouldn't even bother trading. I'm just here to show you how to read price action. What you do with that is entirely up to you. I pop some demo trades in here. What I do on my live account over on this screen is my business. But if I give you a setup that's pretty solid here, you can bet your ass I'm probably trading it over here, over on my live account. But I'm not going to tell you that, hey, go live here. I might say to you, I'm in this one live already. But when you see me trade on here, I'm experimenting on here. I'm playing on here. I'm trying to read price for you. Where you decide to get in on your trades is entirely up to you. I just want to, my objective here is to teach you what I know about trading price action. And if it helps you, great. I think we've been pretty freaking accurate minute by minute here, scalping that. And this account I started back in November. And my objective in this one is to do what like Kevin does. I want to try and do a nice, slow, easy 6% per month climb this account up and see if I can double this account in a year. I know people try to hit it out of the park. I want to make $1 million. Yeah, well, that's ridiculous to start thinking like that. Unless you're like a bomber trader and you can do that, good for you. I'm trying to get this one up to double the account in 1 year by trying to do 6% per month or just nice, easy trades. You'll see me fail miserably in this. I will experiment with this. I will blow trades because I'm experimenting all the time, but then I'll catch some good trades, and overall the account should continue to grow. I want to show you that you can make losses in here and still grow an account by following your rules. So that's my objective of this account, that you guys get to see the paper account. The Bitcoin account, I want to try it. I'm trying to go all balls to the wall there and go double that account in a month. That's my goal, is to try and double that in a month. And that's not a reasonable thing, but I'm trying it. Oh, do you know Jabana? Jabana! Jabunge. That's all I know in Indian. I think it's Indian. Hindu? Is it Hindu? Jabana! Jabunge. Who's making the tea? Where's the tea? The problem is that I have tons of money over years with paper trading. I double my account almost every 3 days. Easy. Well, you're leveraging the shit out of your account then. If that works for you, great. I don't care whether or not you double your account. I want to know whether or not you've got logic trades. You make clean entries. The money doesn't matter. I don't care about people's money. I don't care about how much money you make. Who cares? I just want you to, I want to see your entry. Is it clean? Do you have a nice clean exit? Do you have an exit strategy if it fails? Otherwise, you're just one of those people that doubles your account. Big deal. What's your entry? Share your entry with people. I'm not trying to beat you up or anything. I'm more impressed with how you trade, not how much money you make out of a trade. You'll see me flash saying, oh, look, we made lots of money here. I'm just trying to show you that you can, if you're looking at money, you can do little bits of money here and there based on logical entries and reading price action. You don't have to hit the out of the park and double your account. If you can, good for you. Like, man, that's awesome. You can double it in 3 days. You don't need me. You don't even need to be here unless you want to share your skill set with people. That's great. There's a difference between paper trading and live trading. The only difference between paper trading and live trading is your psychology. Because when you have your live money on, it changes. It now switches to how strong are you in your psychological belief about your trades. Because if you're not, it'll show up when you put live money down. If you're not solid on your entries and comfortable with your entries, you'll start to panic the moment that you look over there and you see those dollar bills going down. Because that's all you'll focus on. You're not ready to trade live. Sit in paper until you get comfortable with your entries, then trade live. Paper accounts aren't any different from live accounts, only by the fact that your psychology is involved. It's real money now. That changes, that suddenly in your mind, it changes how that trade happens, which it shouldn't. If you're trading pure logic and entry, that should not affect that trade whatsoever just because it's a live account. Unless you got a crooked broker that likes to take run on your live money, then I have no control over that. Pick your brokers wisely, because they, like Michael says, they will take a run on you. This morning I posted an entry I made on, and that was actually my broker account. I put an entry in, and literally the wick trailed right over my entry and didn't take me in and left. Literally, the spread opened up so wide that it wouldn't take me in. And then I had a perfect entry for a long. You'll see that on the Telegram thing there. And I've done it with, I've entered in, caught a nice perfect entry, and all of a sudden it just it puts me up here and takes me out. My stop loss is sitting here, and it closes me out up here, and then continues down with no wick, no nothing. In the middle of like 2 or 3 hours into the day, it suddenly ripped up there and took me out. It's like, where did that come from? Like, just suddenly took me out of the trade. No reason you explain that at all. And then all of a sudden, the spread is back into a really tight spread again. It just blew through my trade, and it wasn't no special news release. It was no hour, beginning of the day. It just opened up wide, took me out. It's like, what the hell? So that's why I hate MT5. Don't like MT5 accounts. MT4 wouldn't give you a thank you form anymore. So I prefer this trading view. You get what you're asking for. You ask for a trade, you get the trade. Sometimes you'll see a little bit of opening up on the spread here, but it's very minimal. Like this is 0.25. Go to an MT5 platform and see that. You'll never see that. It becomes super crazy, especially on a 1 minute chart. It's hard to trade a 1 minute chart because the spread is so freaking huge, and it's constantly opening and closing. Don't paper trade, guys, for more than a few days. What? How is that? Boy, you're ever sharing an opinion there. Don't trade paper trades for more than a few days? What's your logic behind that? Derek's out of here. Too much for me. Talk to you all later. What's your logic, Rito, of don't trade for more than a few days in paper? You can't just give a statement like that. You got to give a reason. Most people make money easy in demo trading. Well, that's fine. Then you understand the market, right? You got to get past the psychology. If you're doing demo trading and you still get nervous about a trade, you honestly think that putting your money in live is going to make you any better just because you don't want them to trade? You want to put somebody in that psychological stress because you think demo trading is too easy? Come on. There's no logic to that. And if you get really confident building your demo account because it works over and over, you start off with a small live account. When you're ready and you're okay with your entries and your exits, you build your confidence on your demo accounts. And a couple of days is not going to build confidence. If you've been trading it for years and you make millions of dollars in a demo account, great. You've obviously got a system that works. Start off with a couple $100 in a live account. Now deal with the psychology, and if you got the psychology creeping in, then you're still not ready for the live account. Go play with a funded account so you don't have to pay $50 for your $5,000 account, and then you're only risking your $5. There's a slow transition into real live money if you want. But I definitely do not agree with you about only trade demo for a couple of days. But you're entitled to your opinion, my friend, and I respect your opinion. I love your passion. I love your passion for your beliefs. It's good. If you are experimenting, then trade paper. If you have a solid model and an edge, then go for it. Yeah, I'm out of here too. Good luck to all of you. See you tomorrow, D. Thanks for everything. You're welcome, Abs. We'll talk to you later, man. I might call her quits. It looks like it's just doing a little sideways stuff today, so I might be out as well. Oh, I wish I started demo trading my first year. I wish I would have started demo trading. Right from the beginning, I went straight to live money and lost a fortune, forcing myself to skip demo trading and went straight to cash. So I'm a firm advocate of get your plan, trade your plan, feel solid about your plan till you can trade it on demo account completely flat and say, I don't care, it's going here. If it doesn't, I'm good. I'm on the wrong side, and I know I'm on the wrong side. I'll get on the right side, make some money back the other way. And it should be just literally, like Michael says, ones and zeros, man. Binary. If you're not there, you're not there. Stay in demo until you get that set up perfect. And if you're influenced by everybody else making money, you're still not ready. You're rushing yourself. If you're just starting out in this, give yourself 2 years minimum. If you're not ready for that, then you're not ready. There's nothing I can say. You can just jump off the mountain all you want. Get out there. I hope you're sore, man. I really do. Right. Me too. I would have saved myself so much money. I have saved a couple of bucks too. I was a solid example of the Dunning-Kruger effect. I did paper trading for years. It was the biggest mistake I ever done because you can get in a bad habit when not taking into account psychology. Oh, okay, I see what you're saying. So you're saying it's if you're not trading live, you're not experiencing the psychology of worry, of stress. So you think that having that is essential to growing. And you know what? You may have a valid point there. You may have a valid point. I think that if you can imagine that this is live money, if you treat a demo account like live money and you get a little miffed at yourself if you're on the wrong side till you get it ironed out and you feel comfortable with it, start off with a very small live account. And if that psychology kicks in, then Rito's right. Then the psychology is something you have to work on. And you may not get that until you put live money in there. I think that's what Rito's trying to say is demo accounts are fine and they're always stress-free when you think about them from the perspective of there's no risk. You're not actually losing anything, so you're not really risking anything, so you're not really feeling the pain of loss. Okay. From somebody who teaches NLP, I could, if you create a strong enough why or strong enough how, you will feel all the anxiety you want in a demo account. And that's what people get when they beat themselves up. I don't know if you can find anybody in here that can't honestly say that they get pissed off even if their demo account loses money. They get emotional about it. Yeah, you get more emotional in a live account, but until you get non-emotional in a demo account, you're not ready for a live one. And if you're already at that point, Rito, of I've traded it for years and that I don't care, it doesn't affect me anymore, you got to remember other people out there may not have the same experience you do. That's why you're so passionate about it, because you don't get any feeling from it. Till you put live cash in there, then you go, now I'm feeling it. Good. That's your next level of evolution. So I salute you in your evolution, but you can't impose that on other people. You can't impose that on other people because they may not be in the same place that you are. And I think a great transition is your funded accounts or going through a challenge. It may not be real money. It may be only your $50 or $100 that you're putting on there to buy the account in the first place, but you'll feel the stress of that. If you want the intermediate, then you're only risking $50, but your challenge is to pass the funded accounts. That's why I love those funded challenges, because they really instill some psychological, you got a little bit of skin in the game, but you're hoping, you're really working to try and make that paper account work now. So if you're really good at it, you should be able to blow through these funded accounts like nothing. If you've done paper, this is paper semi-funded. So if you're blowing you're triple blowing accounts out like crazy, like you're getting double and triple your accounts in no time at all, in a couple of days, you should be able to blow through a $100,000 funded account challenge in a couple of days and then start making money like crazy off of somebody else's account, and it only costs you $400 to get started. That's a great way to invest your money. So you don't need to do any of that stuff then, Rito. You can just go buy yourself a $1 million account in England for 200 or 2,500 pounds. Get yourself the $1 million funded account. Get $150,000 in a couple of days. Get your 2.5 or 2,500 pounds back, and now start making bank on somebody else's money, and all it cost you is $2,500. Way more logical. So if you're good at trading paper, do that. That way you don't have to put much of your own money in there at all. And once you got your 2,500 pounds back, you have zero stress again. So what do you need to do? Do you have to take the $1 million and put that on there just so you can feel the rush of pain again? The psychology? I'm not sure I fully support your idea, but I see some logic in it. Yeah, I agree with you, Tristan. If you just look, like you see, I could just throw 10 lots on at a time here and try to just blast this account through the roof, but it makes no sense. It's not logical for me. I've got a purpose. I'm trading with a purpose in mind. If I can just slowly accumulate growth on this without trying to put 10 lots on, can I do it with one lot at a time? Just nibble my way up to 6% per month? Great. Then that's my objective. I guess it all depends on your purpose. If you're just throwing 10 lots at it and you're getting lucky a bunch of times and you double your account, you think you're a genius, then good for you. What's your trading plan? You got to know your plan. You'll figure it out in here. If you don't figure it out in here, you're definitely not going to figure it out with a high stress live account. And it's going to take you more than a couple of days, I guarantee you. I can never do live what I do in demo. Why not? Why couldn't you do live what you do in demo? If you trust your trade, you trust your algorithm, you trust your setups, this should be no different. You should be able to trade completely binary. You're either over leveraging your demo account and think there's no way I would ever put that on my live account. Well, then you're not trading your demo account properly. You're not practicing properly. Perfect practice makes perfect. Not throwing everything you can at it just because you're impressed with big numbers. If all you focus on is dollar bills and not your trade, then you think, oh yeah, I would never do that on my live account. Well, of course you wouldn't. You wouldn't throw a $30,000 trade on in your live money because you don't have any confidence in your trade. If your trade was bomber and you say, I could put 30 grand on that and I'm not worried about it going past me, you better have a $300,000 account to do that. But, you know, if you're reasonable and you have a reasonable setup, I'm not. It's an interesting debate. I do enjoy debating with you. Anyway, it's fun. I don't mean any disrespect in this at all. I love the fact that you're passionate about your belief, and I appreciate it. So thank you for allowing me to debate that with you. That's good. And I'd also, guys and girls, will check back with the New York lunch. Thanks, Darren. Cheers all. See you later. Farewell. Yeah, actually trading on live accounts helps me grow my psychology faster. I can't also trade only demo. Well, that's good. If that helps you psychologically, it doesn't mean it helps everybody else psychologically. If it does it for you, good for you. Oh, how long did I take to become profitable? Years. Just because it's the psychology, for me, it was the psychology of trading live too soon. I had a lot of negative thoughts, looking at the negative psychology, and then trying to get past that once you've ingrained it into your head with thousands of dollars worth of loss. It's brutal. It's brutal. I still battle with it. Good debate this morning. I like that. It's been a good debate. All right, well, we're just sitting inside this range during lunch hour here. So I'm going to call it a day as well. I wish you guys an awesome afternoon. I will be back tomorrow on Friday to have a little peek at the markets. We'll see have a good look at the afternoon. Look for, again, another run back down into this, like another stab down into that daily fair value gap. I'd like to see that one more time today. It looks like we did hit the rest of that price leg that we were looking for over here. It just tapped it and left. So I can delete that now. So keep an eye on your charts, keep your powder dry, set up your trades, look for your fail safes, and I will see you guys tomorrow. Thanks again for tuning in, everybody. I really appreciate it. Thanks again. And Retro, man, I appreciate your point of view. I love the debate. I love the fact that you kept it respectful, and I love you for that, man. Thank you very much. I appreciate people's feedback, and you know, you're allowed to have a differing opinion from somebody else, and you're allowed to be passionate about it too. I love it. I love it. So thank you for sharing that, Rito. You're awesome. Appreciate it. So I will see you guys tomorrow. Much love to all of you. Be safe out there. Take care.